Today, we're digging into something a lot of people find kind of tricky.
Yeah.
It's all about building a really rock-solid investment portfolio.
Right.
We hear all the time about diversifying,
Absolutely.
not putting all your eggs in one basket.
Yeah.
But today, we're going to go way beyond that basic stuff
Definitely.
and look at the actual strategies
Mm-hmm.
that can make a real difference.
That's what I'm here for.
So, diversification, people think it's all about spreading risk,
Yeah, that's part of it.
but there's more to it.
Absolutely.
It's also about
so much more.
how do we maximize the potential for good returns,
Exactly.
but in a way that really suits each person.
Yeah, because it's not one size fits all.
Right.
It's about understanding what you're comfortable with.
Totally.
Your goals.
Yeah.
Your time horizon. Your risk tolerance.
So it's kind of like
all of those factors come in.
building a house.
Okay, yeah, I like that.
You need a good foundation, strong walls,
Yeah.
a roof that can handle anything.
That's a great analogy.
So let's talk about building that investment house.
Right.
We all know about stocks and bonds.
Mm-hmm. The basics.
But, within those categories, what are the different building materials?
Yeah, that's a great point because, it's not just about buying stocks or buying bonds.
Right.
There are so many different flavors.
Yeah.
So with stocks, you could have growth stocks.
Okay.
Which are those companies that are really up and coming, high potential.
Got it.
Maybe not making a lot of profit now,
Yeah.
but you expect them to grow a lot in the future.
Right.
Versus value stocks, which are more established,
Okay.
might be undervalued by the market.
Interesting.
You're looking for those hidden gems.
Oh, so it's like choosing between
Yeah.
a trendy new neighborhood
Yeah.
and a historic district
Exactly.
with hidden gems.
That's a perfect way to put it.
And then what about bonds?
So with bonds, you have
Yeah.
short-term bonds, kind of like parking your money safely for a bit,
Got it.
versus long-term bonds,
Okay.
offering potentially higher returns, but they're a little more sensitive
Oh,
to
wow.
interest rate changes.
That makes sense.
So each one has its own
Yeah.
pros and cons.
Right. And so how do we figure out which neighborhood is right for us?
Well, that's where understanding your own personal situation comes in.
Mm-hmm.
So things like your risk tolerance.
Yeah, I've heard that term.
It sounds kind of vague.
But what does it actually look like in my portfolio?
Yeah, so if you have a high risk tolerance,
Okay.
you might have 70% of your portfolio in stocks,
Wow. Okay.
maybe even tilting more towards those growth stocks we were
Yeah.
talking about.
Mhm.
But if you have a lower risk tolerance,
Okay.
you might only have 30% in stocks.
Okay.
You might favor those value stocks
Got it.
and have a larger chunk in bonds.
Okay. So that's,
So it really depends on your individual.
where it gets interesting.
Yeah, where it gets interesting.
Yeah. And there's also this idea of dollar cost averaging.
Yeah.
I've always been kind of intrigued by that.
It's a very powerful strategy.
What's the psychology
Yeah.
behind why it works?
It's all about taking the emotion out of investing
Okay.
because we're all human.
Yes, we are.
We get scared when the market goes down.
Oh, yeah.
We get greedy when it goes up.
Absolutely.
Dollar cost averaging helps you avoid those emotional pitfalls.
Right.
So you're investing a set amount
Okay.
regularly,
Got it.
say every month.
Mm-hmm.
And that way you're automatically buying more shares when the price is low.
Oh, that makes sense.
Fewer shares when the price is high.
Right.
It's like a
Yeah.
built-in system to
Yeah.
help you buy low and sell high.
So it's taking advantage of that volatility.
Exactly. And it's really good for volatile markets.
I see.
And studies show that it can actually outperform
Really?
lump sum investing
Wow.
over the long run.
That's amazing.
Yeah, it's a really
I like that. part.
powerful strategy.
So it's not just about building the portfolio.
Right.
We can't just set it and forget it.
Exactly. You got to tend to your garden.
Yeah.
You got to make sure it's
Yeah.
growing properly.
So that's where rebalancing comes in.
Absolutely.
But are there different ways to rebalance?
Yeah, there are a couple of main approaches.
Okay.
One is time-based.
Mm-hmm.
So you rebalance your portfolio, say, every 6 months or every year,
Got it.
just based on the calendar.
Okay.
And the other approach is threshold-based.
Okay.
So you only rebalance
Yeah.
when your asset allocation drifts too far from your target.
Interesting.
So maybe if your stock allocation was supposed to be 60%
Right.
and it goes up to 70%,
Yeah.
you might rebalance to bring it back down to 60%.
Okay. And how do we choose which way to do it?
It really depends on
Yeah.
your risk tolerance,
Mm-hmm.
how actively you want to manage your portfolio.
Got it.
Some people like to be very hands-on.
Yeah.
Other people prefer more of a set it and forget it approach.
Right. So if we are going for a more hands-off approach,
Yeah.
Index funds and ETFs.
Those are great options.
Looks like they kind of fit in there, right?
They're a great way to get instant diversification without having to pick individual stocks and bonds.
Yeah, you don't have to do all that research.
Exactly. You can just buy a basket of stocks that tracks a particular index, like the S&P 500.
Right.
And that way you're automatically diversified across hundreds of different companies.
So it's like one decision.
Exactly. It's a very efficient way.
Really simplifies things.
To diversify your portfolio. But it's important to remember that diversification
What is it?
Is not just about the number of holdings you have.
Right.
It's about making sure those holdings react differently to market events.
Okay, I think I've made this mistake.
A lot of people do.
I used to think that if I had a ton of different stocks, I was diversified.
Feels good.
And then I learned the hard way.
Uh-oh.
During a market downturn?
Yeah.
That I hadn't really considered how those stocks were correlated.
It's a very common mistake.
Yeah.
You think you're diversified, but then everything drops at the same time. And you're like, wait a minute.
Right.
I thought I was protected.
Yeah, it was not fun.
It's not a fun feeling.
So diversification, it's not a magic bullet?
No, it's not a magic bullet.
It doesn't eliminate risk.
Right.
Completely.
It's about managing risk.
Okay.
Not eliminating it.
So it allows us to weather those market storms.
Exactly.
But maybe not lose the whole roof.
Yeah, you might lose a couple of shingles.
Yeah.
But the house is still standing.
The house is still there.
Exactly.
So I like this house analogy.
Yeah, me too.
It's like we built this house.
We've got a good foundation.
Yeah.
We've got strong walls.
Yeah.
We've got a roof.
Yeah.
That can withstand the storms.
But even the best houses need maintenance.
Absolutely.
You got to keep up with it.
Got to check for termites. Got to make sure the roof isn't leaking.
You got to repaint it sometimes.
Exactly.
So for a portfolio, that maintenance is rebalancing.
Yeah.
Consistently reviewing our strategy.
And making adjustments as needed.
That makes a lot of sense.
Yeah, because life changes. Your goals change.
Right.
Your risk tolerance might change.
Your time horizon changes.
So you got to adjust your portfolio accordingly.
This has been so helpful.
I'm glad to hear that.
I feel like I understand this so much better now.
So knowing all of this, is there like one area of your portfolio that you feel could benefit?
Oh, that's a good question.
From a diversification upgrade? Maybe it's exploring those different types of stocks and bonds. Maybe it's diving deeper into index funds and ETFs.
Yeah, I think I need to think about that.
Take some time.
Yeah.
Reflect on what we talked about.
Yeah.
See what resonates with you.
That's a perfect question for me to think about.
Yeah, and for our listener.
Absolutely.
Remember building a truly diversified portfolio. It's a journey.
Yeah, it's not a destination.
That's something you do overnight.
Right.
It's something you continually work on and refine over time.
So keep exploring.
Keep learning.
You'll be well on your way.
To building that
strong, resilient investment house.
Exactly.
That can weather any storm.
Yeah.
You got it.
Awesome. Thanks so much.
My pleasure.
This was really great.
I'm glad we could do this deep dive
Yeah.
into diversification.
I think our listeners are going to get a lot out of it.
I hope so.
Yeah.
It's a really important topic.
Absolutely.
For anyone who's investing.
Yeah.
Or thinking about investing.
It's the foundation.
It's the foundation of a solid financial plan.
Couldn't have said it better myself.
Yeah.
All right. Well,
that's it for today.
Thanks for having me.
Thanks for coming.
And to all our listeners out there.
Yeah.
Happy investing.
We'll see you next time.
Take care.
Bye.
Bye.